How to daily study 20% moves? I earlier used to recommend study 8% moves, but I realized a lot of people are busy. So I'm recommending at least study 20% moves in a week. So you're looking at a stock which has made 20% move in a week. Basically, like say a stock like this has gone up 20% in last 5 trading days. So you want to study what kind of patterns they show or what kind of moves are these, and if you study those moves, then your objective is to find those kind of moves in today's stock. But this study has to be done daily if you want to really become a good trader, really improve your trading skills. And then people ask me, but what should I study? So this video will answer some of those questions. So let's look at what really is this scan looking at. To start with, you're looking at ADR, you're looking at US common stocks, ETFs, and you're looking at a move in 5 days. This is C's closing price today, closing price 5 days ago of at least 20%. And you're looking at only stocks which have liquidity above 100,000, and I'm looking at only stocks above $5. Obviously there are stocks below $5 which would have made this move, but for this study we are going to use only this. And same way we are going to look at the bearish side of this equation, which basically is same, but on the bearish side you're looking at a stock which is down at least 20%, and remaining criteria has remained the same. So let's start by looking at these stocks. And you can, like, when I was starting out trading, I used to do this daily, and I used to take extensive notes. I used to print out charts. I used to have books of charts. I do this study every day still. Now I do it, but I don't have to do all those things now because it's like been doing it for so long. I know what to look for and what to not look for. Now let's start by looking at, like, say, the stocks. Now this is let's sort it by, like, say, 5 days. So that way you have a stock which made the largest move at the top, and the stock which is just up say 20% is at the bottom. And let's look at some of these. Okay, now Amarin, which like basically made a very big move. It gapped up and went up 314%. Now you will see this again and again, that this is very common in biotechnology stocks. Like if there is some catalyst, they can gap up. This gap itself was like 247% or something odd number. Okay, and after that, that stock went up how much percentage on that day? If you look at from open it went up almost like 20%. Okay, so that's very common. So if you get a stock with a biotechnology catalyst which is up in pre-market, you can assume it is going to go up and take a smaller position for at least short-term trade. So this is the other thing which you will notice is many times, especially when we go through all these stocks, is that you hear a lot of things in the market. Like everybody is trying to tell you, like you look at buy stocks which are near 52-week high, or buy stocks which are being bought by institutions, or buy stocks which have very good growth characteristics. Or if you are IBD follower, IBD is telling you buy stocks which have EPS rating above this and that, and everybody is telling you, look, the magic to making money is to use this particular factor. But you can take that as a gospel truth. God exists, don't question that, and go wear your suit and go to the church. Or you can question, and if you want to make money, you cannot blindly believe anybody, no matter what his name is, or if there is guru in his name also, you should not believe that person. Self-evident truth is what you want. You want to see for yourself whatever anyone is saying is true. So let's look at this kind of moves happen. Most of these kind of moves, you can, if you historically study this, you will see that they will have a orderly pullback, and after that sometimes they make a move, or they just go sideways for a long period of time. This is another example of that. 246% the stock was up. Next day it was up another 10% or so, and then just it pulled back. So this is very common in these kind of moves, and you can see a lot of these kind of moves in biotechnology stocks. If I can remember, I think Reta doesn't have that, but like MDGL will have it. Okay, so this is like That's 144% move. And then just like, and here also it was like some odd, some 88% move. This is very common in biotech. So these kind of moves will be very common in biotech. Now, one of the implications of this, which we are diverging a little bit from our original objective, is, but this should tell you, if you look at if you want to short a biotechnology stock, what is the upside risk, what can happen? Like if you short this particular stock, for example, you can get wiped out. There are like examples where the stock has gapped up 400 or 500% and gone up another 200% on the day in biotech, and this has happened recently in last 1 year or so. So keep that in mind, okay? But like these kind of moves, if you want to capture, you need to be an active trader and do scanning real time. Now again, like this is a stock which made a big move, okay? Now what you'll see is that where did this move start from? The stock has been going down, right? The float is only 1 million. That's another thing to look at. Like the float is only 1 million in this particular stock. The float, I will have to look up on the market Smith because it's not here. But like look at it, the float is only 1 million. Okay. There was a reverse split. It split 1 for 30. So basically what it did was like it must have been trading at like a few cents or something before this. So it reverse split here. And then you'll find a lot of these reverse split kind of candidates can make these kind of crazy moves. Again, like now look at any one of these moves. Like this move had 4% move plus move on a breakout day. This move had 4% plus move on breakout day. Here is another stock which has made a big move. Now again, look at this. Where was this stock before it made a big move? Where was this stock before it made a big move? Was it at 52-week high, or where was it? Where was this stock before it made a big move? Where was this stock before it made a big move? So as I keep saying, look, and do not listen to people unless you actually yourself find out whether that is true or false. So let's look at this particular stock. Okay, this was the first 4% breakout. Again, like you would not take because your criteria are that it should have it should not be up 3 days in a row. It was up 3 days in a row. So, but it was 3.72%. It wasn't 4% breakout, but it was a breakout, and then it just went crazy. So these kind of moves happen, but the thing is that if you are looking for shorting some of these moves, these extreme moves, especially these kind of moves happen with some sort of a again, look at the float on this particular thing. The float is so small, like that's why I have said also, like look, and if you have too many 4% breakout and you want to select one with the lowest float, like ultra low float stocks will make these kind of big moves. Ultra low means like anything which has like a float below 1 million or 2 million or 3 million. Those are the one which can often make these crazy moves. Now again, look at the same thing which we have been discussing again and again. What is happening? Where is this move coming in from? Okay, and this is the fourth stock you're looking at where the move didn't happen near the high. So anybody who tells you 52-week high is what you should be focusing on, what you should say, thank you, I want to do it, but like, can I do what really works? Again, there was a reverse split. Okay, so these stocks are doing reverse split and then they're rallying. So if you're really into looking at some of these kind of junk stocks, these are junk stocks, but doesn't matter if you can make money, right? And money is money. The bank doesn't ask you, as one of the members used to keep saying, where you got the money from, or did you trade junk stock to make the money? So basically anything which reverse splits and the float becomes less than 3 million or 4 million is the one which is likely to make this kind of thing. Now again, all these candidates show up in your 4% breakout. Okay, now what you can study is you can put like all these and create criteria. Like I created criteria 3 links saying this is what you should look for, like in a setup, but this reversal setup will not meet those kind of criteria because these are like really sudden moves which happen from the thing. So you can create a criteria for that. Now you have a CAD. Again, let's look at first thing, which is like, can I do move start from 52-week high or 52-week low? And that's a question which If you can answer that successfully, there is $1 million insight in that. Okay, now look at it. Look, where do these stock all show up? 4% breakout. Okay, every big move which is 20% plus is likely to have 4% move, because 20% divided by 5 is 4. Okay, so in one of those days it is going to have 4% move. So if you just focus on buying 4% move, you can find most of the big moves. So it's 4% breakout is really the key to finding big moves, explosive moves in the short term, basically. And you can question why 4%, why not 3.9% or 4.1%, or doesn't matter. It's just approximation. Okay, but if you want to find big moves, focus on 4% breakout. Okay, so a CAD is there. Okay, now again you will see AGTC. Okay, now these are stocks which are like bottoming. Okay, so always look at, like, again this is like kind of gapped up, and this is the second day of the move. And you'll also see most of these stocks, what was their price before they started the move. This was $2.75. This was like in $4.50. This was again like below $5. Okay, this was again below $5. And remember, they have done reverse split, so they were like in a few cents stock before this particular move, or a CAD. Okay, this is a rare stock which is around about $10 when it made a move. So lower the price, higher is the probability it will make a big move. If you're looking for something which is going likely to make 20, 30%, 40% move, it's the lower price stock. So if you have a smaller account, focus on lower price stock. Now here again, like this is a stock, this is an IPO, okay, which made a move. Like this was a 4% breakout, but life is not perfect. You are looking for a perfect setup and 4%, but like these are the kind of reversal setup. And this is also phase driven, like the market phase is such that the stocks at the top are struggling most of the days, and stocks which are at the bottom, they are the one which is where the money is going. So but like again, 4% breakout will find all and every big breakout. Okay, LEVB, Level Brands Incorporated, again it's an IPO, went down. Okay, it's thinly traded. This is a 4% breakout. This was not a 4% breakout because it was only 21,000 shares were traded, and then it made this move. And now yesterday only 49,000 shares were traded. Okay, Love, this is another IPO, again like something which was not which wasn't really near high, or the glamour which everybody focuses on, or the people call them leaders. They are not necessarily the one which make the biggest move. And again, you'll see that like the criteria is like close near the high doesn't really matter in some of these kind of things which just make a move. And always look at the float. You can't see float here, but like most of these will be small float. Now this is an ideal candidate in terms of what we look for here. Like it made a move which is a perfect, you can like in a frame, this is what we look for in a 4% breakout. First leg, very orderly consolidation. Again, it's a lower means low flow liquidity, but like it made a move. What is the float? 6.5 million. So take notes, like can I lower the float, always like can I focus when you have 4% breakout. Again, like there is move here and it made a move. Okay, so it met that criteria as of not being up 3 days and all in this. Okay, so if you want to make money, focus on lower price stock, is at least what you know from the top 10 stocks which we looked at. Okay, and focus on stock, not necessarily like there are stocks which are like this, but even this stock's move didn't start near 52-week high. It started from the lower level. Okay, so this is one CRBP. Okay, now this has got high float, but MBOT. Okay, molecular medical, again like where did this move start from? Okay, Aiden, where did this move start from? There's a big 3 days move. Okay, where did it start from? Fate Therapeutics. Okay, now this is a consolidation. So something which is consolidation, coming out of the consolidation is a better option many times. So again, like this has fairly large float. Stock is about $11, but a lot of time you find lower price stocks dominating the action. Again, at the start of this swing, what was the thing? At the start of this swing was a 4% breakout. Okay, so CNAT. Okay, again, what do you see? it's like not the ideal kind of a situation. Again, like a stock is not starting from a 52-week high or anything. It starts from this. So these are the kind of patterns, or you can create a pattern library and look for these kind of patterns in 4% breakout and create conditions for that. Look, and it should be coming down or like negative and then breaks out, and float is below this, or like price is below $5 is what I'm focusing on. I'm going to focus on. If you're a smaller account, I would say that that's not a bad idea. Now you've seen again, like why didn't it come into 4% breakout? Because the volume was marginally low on this particular day. Otherwise it was a 4% breakout. But again, stock is starting from where? From low. Okay. WTI, we had a position. This was like an ideal. I personally, in my thing, like, and I screwed up on very aggressive stop on this, but like, and this was a good setup again. Like, and it was from a consolidation. It started and perfect, like in terms of what we look for in 4%, and it did make a move. Okay, this was just one day. Bio Francisco BFR, like this is a move which happened. Like, okay, so now again look at it. Where did this move start from? Okay, think about this very seriously, because this is itself by itself a big insight as to what to do. And in fact, and I'm working on creating some sort of criteria for deciding stocks which are near the bottom, because you see more and more this happening. Now this is another one. Again, what happened at the start of the move? This is 4% breakout, 4% breakout. So your number one priority should be to look at 4% breakout as early as possible. This is an IPO again. Like, see, every time there was a 4% breakout and it had a follow through here, there was a 4% breakout. Didn't close near the high. So that's why in 3-inch, it's like the more important criteria is not up 3 days in a row, but the remaining criteria, the last criteria to look at is not close near the high, which is not as important as the first criteria. So you can like take a call on your whether to buy something which is like not up or not near high. Okay. Again, GGL. Okay, this made a move here. Okay. Now where is this move starting from? Is it starting near 52-week high? Now steel case, obviously this stock was near the top of the range, and from where the move started, this was before earnings day, so obviously this was a good 4% breakout. Again, in order to find big moves in a week, the only scan which you need to focus on is 4% breakout scan. Okay, again the move started from where? Waterfall declines and then recovery. Okay. So why do you think everybody keeps telling you to buy stocks near 52-week high and only stocks with this thing above a certain level or something? Think about it. If you're looking at like explosive moves, now this was up 4 days in a row, so I wouldn't take something like this, but it did make a move. So here again it had a move. Okay. Now again, this stock is not really near high or anything. It had corrected, and from correction it made. Obviously, it's had a 4% breakout, and this is the third day of that thing. Okay, Pen Therapeutics or like Polarity T. Okay, not near the high. Stock is near the high, so reversal kind of a setup. The Pixie again, like in the stock was not near the high, and very volatile move. Loma. Look at it. Beaten down stocks will make bigger moves than stocks near the high. Zon, another example of biotechnology or drug stock which makes a big move. Most of these big moves, you have to be careful. Next day they can end up being like this. So that's very common in this kind of stocks. Again, stocks which have like a neglect or going down are more explosive most of the time. This is HQS, again like move started here. So these are the creeping kind of stocks which are difficult to trade, but this was an ideal 4% breakout here. Okay, where did the move start from? From a range kind of a situation. Okay, dry ship again like move started. This was like, and the stock was down almost 40% before the move started. Okay, And this is more in line with the guidelines which I have given, not up 3 days in a row or something. Quorum Health, now the stock was up 2 days in a row. This was 3.64%. But where was the stock coming from? From a low, bottoming ranges. Okay. So these are the 30 stocks, and if you look at these 30 stocks, what do you learn? You look at lower the price, better it is. Lower the float, better it is. Stocks which are near 52-week low, or which are near their bottom, or which are beaten down, or in consolidation, are better candidate than stocks which are near high. Okay, so think about this. These are the kind of observation which you can write down and look at what to look for. Like this kind of a candidate, you wouldn't select based on linearity and all, but those are the one which are making the big move. But again, you have to do this study daily, because this is market phase dependent. The upper part of the market, many of the stocks are struggling, and they're having breakout, and those breakouts are fading. They're not having a follow through, while money is flowing into these kind of stocks. So in a different market environment, like if you're looking at this after say a market at 10% correction, and then it start rallying, you'll find a different kind of dynamics after 15-20 days. After 15-20 days, that time you'll be only looking at second leg of the move. So many moves might be have a different characteristic. So that's why you have to look at it. So now let's look at this number. This number is 33. So 33 stocks are meeting your condition of 20% plus. How many stocks are meeting the condition of stocks down 20%? 4 stocks. Now this should tell you something, where you should be focusing on. There are a lot of people who keep saying, short is where the money is. Yes, there might be, but that's a very niche kind of a thing. The bulk of the stock, majority of the stock, all the time are going up. So focusing only on the long side is a better strategy. When the market goes down, or it enters a bear market, then everything will work on the downside. Currently, if you try and find a short, you're just fighting a losing battle. So these are the 4 stocks only in this USAT. Okay. Now this was a strong stock, and then it gapped down. Now again, when it gaps down, a lot of time, if it starts going down immediately in 3-4 days, it's good. Otherwise, and it can just keeps on going. A lot of time you get a move like this. Okay, there is a gap down, and then it just keeps on recovering. So that you have to be careful about. But again, 4% breakdown. Okay, look at this. This is a IPO. Once it broke the IPO price, it just shorting IPO is also as profitable as buying IPOs. In fact, most of the IPOs go down. But it's difficult to get shares to short and all. But again, this is a breakdown. Obviously, Tilray is an extreme example. You're not going to find many stocks like this in a year. Once in a while, you get situations like this. You can't really play for only these kind of situations. You have to play for more higher probability setups. But extreme moves or extreme strength, you should short. But it was impossible to get short, or wherever shorts were available were very expensive. But extreme momentum will always end up like this. Okay. Now Targetex again, this is weak stock, became weaker. Nothing much you can learn from something like this. Just and it was weak. So biotechnology stocks, both in upside and downside, can make big moves, but the risk, according to me, is very high of shorting a biotechnology stock, because many times something which is completely been given up as dead money, say mankind, okay, and suddenly what happened? This is 89%, and this is 5. But if you look at actually to the top of this, this was around 40%. So 100%, 200%, it went up in just 2 days. So the risk is not worth shorting unless you're really doing intraday on a biotech. The risk of gapping up is very high in biotech to the upside, basically. So that's the thing. So this is the learning which you can make. What are the learnings? Basically, short, strong structures, very strong structures, 4% breakdown. Obviously, there's no 4% breakdown on this because there's such a high volume. But on the long side, if you study this, what you will find is that lower the price, better it is. Lower the float, better it is. Ultra low float is where the big moves happen. And 52-week high is not the key to making money. In fact, focusing on stocks with 52-week low might help you find more explosive move than the one where near the 52-week high, or stocks coming out of a consolidation might make bigger moves. This was a big explosive move coming out of a consolidation. So those are some of the things which you can learn by studying 20% moves today. Okay, periodically I will make these videos. What I used to do is I would print out like whatever, something like this. Not much you can learn because these are like rare kind of a thing. But like say moves, I would print out hundreds of charts. I used to have chart books all over the place, in my car, everywhere. My wife used to think that I gone crazy, certified crazy. But like I would print out charts like this, and that is what I want to find. So then you create conditions, or you create the 3 lynches, the condition which I created to find setups like this, which basically says stock should not be up 3 days in a row, should have a first leg linear, should have a consolidation or like a negative day or a narrow range day pre-breakout. This was a narrow range day. Then linear move 3 ly, and so young trend, preferably you want a young trend, you don't want a very extended trend, and close near the high. Those are some of the conditions which you look at, and quality of consolidation. So this is how you study, and you study this every day. And if you take my advice, okay, blindly study this for 6 weeks only. If you can study this for 6 weeks, you will become a much better trader than any $5,000 course or any thing which you can read in a book or see in a video. This study you have to do it yourself, because like see, this is a 4% breakout. Was it a good 4% breakout? This was the first leg, wasn't really like, but that is what works in the marketplace. So more you study, the chart, the amount of like a screen time which you spend will make you better trader basically. And study moves which are like a big moves. This is 20% in a week is a big move. Same way you can study like a 100% plus move or 300%. Don't study 100% in a year, because there will be a lot more. But like if you want to study study 300% plus moves in a year. So this is 1 year, and this is like C by C 1250. And you're looking for only moves which are like 400 plus, I think, because so this is like, and these are the kind of moves which you want to study to see where do these moves start from, what happens, what is the nature of these moves, and then try and find those moves in a current market environment. So hopefully this video will give you some idea as to how to do it. You have to do it daily, then incrementally every day your knowledge increases, you learn something more, next day, and then as a result of that you basically become a better trader. So hard work, not something which you can gain just by following somebody's picks or things like that.